VTSAX is the largest index fund in the world, and it's by a lot. It's got $1.7 trillion of investors' funds, and the next closest index fund, VTSAX, has $500 billion less than VTSAX. But this begs the question, is it actually better? I decided to create something for you. It's a VTSAX cheat sheet, and I'll be giving it away to you for free in this video. It includes important information to help you avoid a common mistake I see people making when they invest in VTSAX. It also includes the return of the index fund. Since it was created back in the year 2000, it's got basic information like expense ratio, total number of holdings. It includes the amount of money it pays in terms of yield or dividends annually based on different amounts of money. It shows the cost of the fund, also given different amounts of money. It shows the overall Morningstar ratings, hypothetical growth of the fund, and more. So let's go over the VTSAX cheat sheet so you can master this index fund. Now, like I said, we have the returns and we have the pro tip to help you avoid a common mistake with VTSAX. But before we get ahead of ourselves, let's start with the basic information about VTSAX. For the basic information, VTSAX is also known by its fund name, the Vanguard Total Stock Market Index Fund, which is Admiral shares. We're going to come back to the Admiral shares part in a second. But of course, the next part is that the ticker symbol of this fund is VTSAX or VTSAX. It has total assets of $1.7 trillion, which I mentioned in the opening of this video. And this fund has 3,677 stocks. So this is a highly diversified index fund. Why is this important? Well, diversification is one of the highly important parts about investing in the stock market. If you have one stock, that stock goes out of business, well, obviously it's going to affect you drastically. But if you have 20 stocks and one of those stocks goes out of business, it's going to affect you much less than, of course, if you have one stock and you lose all of your money. So diversification is really important. Now, if you have 3,600 something stocks and 10, 20, 30 of those stocks go out of business, it's not going to affect you nearly as much because you are so diversified. The price of this index fund at the time I'm filming this right now is around $135. Now, this next part I put in because I think it's really important for us to understand hypothetical growth of these index funds. And so what I did was I said, if you have $10,000 and you took out the fees of this fund, what are the different rates of return you would get over different time periods? I put this here because I think that some less sophisticated investors, some investors who are new to this, beginning to start your investment journey, I think you have trouble visualizing how much money you could possibly make in a fund like VTSAX. So I wanted to include this so you could see it. So for example, if you made a 0% return over 5 years, you're actually going to lose some money because there's an expense. But the great thing about this index fund is that it has a very low expense. So you would only go from $10,000 to $9,980 over 5 years. Not a lot of money is coming out in an expense. Over 20 years, if you made $0, you still have $9,920, even though you made 0%. On the flip side, if you made a 12% rate of return, for example, over 20 years, you'd have $95,694 on your $10,000 investment. That's a huge return. Now, a 12% rate of return might be pretty high. That's why I included a 10% rate of return, a 5% rate of return, and even a negative 5% rate of return, just to show us a range. Next, I wanted to include the cost. And because everyone is investing different amounts of money, it's good to know different costs. So the net expense ratio for this fund is 0.04%. How much money does that cost annually if you have $1,000? Well, it's only 40 cents annually. It's so cheap. How much is it if you invest $10,000 annually? It's $4 every year. Again, it's so cheap. If you invested $100,000, it would cost you $40 annually. Very cheap for $100,000 inside an index fund. How about the yield? Same concept. The yield is 1.37%. You could call this the yield or the dividends that the stocks inside the fund pay. So if you have $1,000, you're going to get $13.10 every year paid out as income from this fund. You can reinvest that money. You can take it out. You can do what you want. Of course, it depends if you have an IRA or something like that. We're not going to get into that in this video, but then we have $10,000 invested in that, which is $131 annually of income, and then $100,000 would yield $1,310 annually. So now we're getting somewhere. Over $1,000 in yield is pretty good, right? I mean, it's not paying the highest yield. It's not only investing in dividend type stocks, but still you're getting some yield. The top 5 holdings, the largest holding in this is Apple. Apple is the largest stock inside the stock market, and that's why it's the largest stock inside VTSAX. The largest stocks have the highest weight inside this fund. So Apple, 6.07% of this fund, Microsoft, 5.84% of this fund, NVIDIA, 5.13% of this fund, Amazon, 3.29% of the fund, and then Meta, Facebook, 1.95% of the fund. These top 5 stocks account for 22.28% of this index fund. So a pretty big chunk of this fund is actually only in 5 stocks, just something to be mindful of. I wanted to also include the Morningstar ratings. And so we can see the overall rating of this fund given by Morningstar is a 3-star fund. This is out of 1,292 other funds inside its category. The 3-year rating also gives it 3 stars out of 1,292 funds. The 5-year rating is also 3 stars out of 1,185 funds. The 10-year rating is 3 stars out of 893 funds. The historic return is considered average, and the historic risk is actually considered above average. In terms of the regions of these stocks, for example, are they international? Are they in North America? 99.52% of this fund has North American stocks in it. This is not considered an international fund. The remainder, the very small amount, is just in cash. The next is, what is the difference of stocks versus bonds? Well, 99.78% of this is in stocks, and like I said, there's a little bit of cash. So again, mostly this is all just stocks. There's no bonds in this fund. And then we have a style box. A style box helps us understand if there's value stocks, growth type stocks, or a blend of the two, or stocks that kind of fall in the in-between. And then it tells us if they're large companies, for example, like an Apple, or if they're like a mid or a small size company. So for example, 13% of the stocks inside this index fund are considered value stocks, and they're considered large cap stocks. 24% are a blend and large cap. 35% are considered growth and large cap. So it's good for us to see the majority of the stocks in this fund, they are going to fall into the large cap category, and they're actually a little bit more weighted towards growth. Finally, before we get to some of the interesting return part, we have the fund strategy, which just tells us the strategy of this index fund and how it invests and what type of index that it tracks. So finally, the return. If you had bought $10,000 worth of this fund in November 13th of the year 2000 when this fund was created, or the inception date of this fund, that would have grown to $66,172. Now, what is the rate of return of this annually? Well, it's an 8.25% annual rate of return if you had invested in this index fund and you had held it over all of that time until September 17th of 2024. As you can see, there are time periods where this fund was negative. A lot of the 2000s, the year 2000s, were not good to this fund. You could have held it from the year 2000 up until around 2010. You could have still potentially not made any money. All of those returns, they come after around the year 2010. So, I've been alluding throughout this whole video about a potential common mistake. So first, there is a minimum investment of VTSAX. $3,000 is the minimum investment for VTSAX, and these are called Admiral shares with Vanguard. Now, the pro tip here is that some brokers outside of Vanguard, they charge a transaction fee for VTSAX. So for example, if you have a Charles Schwab account and you want to buy VTSAX, you're going to have to pay $74.95. If you have a Fidelity account, you're going to have to pay $100 to buy VTSAX. So what is the alternative here? Well, you can look for similar funds with other brokers. So if you have a Schwab account, VTSAX is also a good total market fund, just like VTSAX. Fidelity has FSKAX, also a good total market index fund that can compete with VTSAX. At the end of the day, my conclusion on VTSAX, bigger doesn't always mean better. As you can see from those Morningstar ratings, VTSAX isn't necessarily the best index fund there is. However, it's still a great index fund. Now, if you have a Vanguard account, I think VTSAX is a great option for a lot of people. If you don't, if you have a Charles Schwab account, if you have a Fidelity account, I don't think it's a good option for many people because you have to pay extra fees to get inside that index fund, and there's other great options. Now, of course, I told you I'm going to tell you how to get this for free. Take a look in the link in the description below under this video. There's going to be a link to my website. You can download this as a PDF. You can download it as a JPEG. Now, there's another free thing I think a lot of you are going to get value out of. But before that, because I'm giving you all these free things, if you do want to support me, you can do that at ko-fi.com. I got a link down in the description. Also, buy me a coffee. If you want to donate something, feel free at your discretion. And also inside the VTSAX cheat sheet, there is the URL where you can donate. So this other free thing that I'm giving to you is an ETF cheat sheet of every single Vanguard ETF with every expense ratio, every return over the past 5 and 10 years. And you can get access to that for free simply by watching this video right here.